Good afternoon, everybody. Welcome to our Selecting an Option Strategy webcast. I'm Connie Hill. Happy you would join me here today at the closing bell of the market day. It's been another interesting day in the markets, hasn't it? How many of you used the thing that we talked about last week? We talked about using the relative strength and comparing entities to the SPX to help you identify maybe which stocks might be a little bit more bullish, which ones might be more bearish. If you use that, I'd be interested in knowing. We're going to continue to use that here a little bit in our stock selection for some of the option strategies we take a look at. Now, I hope you're following us on X. I'm on X. I'm Connie Hill CS. We have the pleasure of having Cameron May in the chat, fellow coach and friend. He is on X and does a lot of good posting as well. He's Cameron May CS. And we'll post things out there that we think that you might find interesting as we run across them, or maybe some questions to get you thinking. We'll do that sometimes as well. So I'm going to invite you to do so. Let's go ahead and go through our disclosures, and I'll talk a little bit more about our agenda, where we're going to be going today. Options carry a high level of risk and are not suitable for all investors. What we talk about here today is for information and educational purposes. Don't consider it a recommendation. We will be using the Paper Money software application. That software you can download to your computer. It's great to practice different strategies, different rules out in your paper account before you jump over to your live account. So I hope you're all doing that. When we talk about costs today, we will not take into consideration commissions and other fees. We're just going to use the straight numbers, but be aware that that will be the case. You'll want to consider that in your trading. Past performance of any security or strategy does not guarantee future results or success. Now, just seeing who here used that a little bit last week. I'm going to say this is Jason Sunsi. Man, I probably massacred how you might say that name, but you have been doing it fantastic. I hope all of you are learning how to use that, because I think right now is a really important time for us to be able to use the relative strength index, which is different than the RSI, comparing it to NDX and so forth as far as what's been going on and what things we might choose to select to trade. Now, as far as our agenda here goes, we're going to look at the market conditions, talk about that a little bit, discuss what option strategies might be conducive to the current market conditions. We're always going to be looking at examples. We've got several new trades to look at today, and just a little bit of follow-up on some things that are in our portfolio right now. So let's first jump over and check out what the market is looking like. Now, I'm going to start out here with the NDX. A lot of the stocks that we use in this class really are NASDAQ stocks, are more technical in nature, although we don't have to stick with just NASDAQ stocks, but we're going to start here. And let's zoom in here a little bit. On the chart, I've got that relative strength up that we're going to talk about. We also have implied volatility up here. Now, the NDX, it was only 2-3 weeks ago that it made another new high, right, back here. But what has happened since then? Well, the market has put in, some people might even call that an equal high. Some might, if you're looking at all the pennies, maybe you call it a lower high. In any case, yesterday for sure was a lower high to go along with this low point. Now, what we need to see for a reversal of trend is a lower low. Now, we're not there yet. It looked like maybe today the NASDAQ was in this diagonal area of support. I wouldn't say it's totally broken through it, because we might draw this with a real thick Sharpie pen or something like that, right? That it's an area. So I'd say it's hanging around support. It'll be interesting to see if we get a little bounce tomorrow out of the NASDAQ, or we are going to watch and see if it makes a lower low, but it's got to come down quite a bit to make a lower low there. Okay. So we're going to keep our eye on that. Let's take a look at the SPX here. SPX, kind of a similar story, not quite as weak. Let's see, it ended up down 1.66%. The NASDAQ was down a little bit more than that, almost 2%. And again, this high point, all-time high again, up here at, that was on the 29th of October, so a couple weeks ago. And it's got a similar thing going on here where this high, I mean, it tried to rally up, but it didn't get as high as where it made the record high. And then we've got on a little bit, maybe slightly slightly lower high, like I probably could draw a straight line there and connect those two. It still is above its diagonal support, so it's not quite as weak as the NASDAQ. And same thing here, if it forms a low lower than the previous low here, then we'll be looking at the beginning of a downtrend. So we're not there yet. Market overall is still, especially on the SPX, a little bit strong, and we will see periods where things sell off a bit to support, rally again, sell off again to support. So we're just going to kind of keep an eye here. Could it bounce there tomorrow? It could. We don't know if it will or not. All right. You love my school icons. Oh, somebody put on some school icons. It wasn't me, was it? Somebody else doing that. Let's clear up our lines. Here, what about the volatility index? I'm sure you're probably tracking that, knowing that it had a little bit of a big move here today, right? It didn't close on its highs. The market started to, well, there were different times in the market day when it tried to fight back. But volatility getting up here where we start to see some weakness in the market. Now, have you been noticing where the weakness was coming from? Does it seem like maybe there's a little bit of rotation going on? It does kind of seem like there is a bit. Let's pull up here. I'm going to pull up a grid chart. And I'm going to pull up my one that is sector matrix. That is 3 months long. And you can see just the different sectors, and we kind of can see the trend if it's kind of more recently going up or going down. I showed this on a 1 month as well, but this is kind of interesting. Looks like kind of some weakness pulling into materials. Industrials had run for a while, maybe starting to show a little bit of weakness there. Where are we seeing strength? Well, interesting, the last couple of weeks we've had strength in energy. We've had some strength in healthcare stocks, pharmaceuticals, biotech stocks, and kind of some waffling, kind of some sideways action, maybe in information technology and communication services. In fact, when I ran my early morning movers bearish search, that was the one that I focused on that had the most results that came back were in information technology and the communication services. All right. Are we seeing the market fleeing to safety? If it were, sometimes healthcare, that can be a place or an area of safety. Utilities typically is a big safety area, but it for the most part has been going down the last month. The other place where we might see it is in the consumer staples. Consumer staples is up here. Maybe I should have had my pen going here so we could see that, yeah, there's more weakness here than strength. So maybe the stronger sectors might be swapping out a little bit what they might be, but I'm not seeing a really big flee into utilities or into consumer staples like we might expect, even though healthcare can be kind of defensive. It is getting a little bit of strength. Let's see what Reggie's saying here. In the last hour of trading, they were kind of switching sides, the indexes, SPX and the NASDAQ on your 4-hour candles. Oh, you're saying on your 4-hour candles, the VIX is a hanging man. Ooh, if we looked at that, we could maybe do that real quick, and then we'll get back to our other analysis. If we just look at the VIX here, we'll just use these candles. Let's remove the lines, but if I change this to a 4-hour candle, so we'll go time frame, and we'll just do, say, a month here, and then we'll do our time frame here. Instead of being a day, I want it to be shorter than that. How about if we just kind of go 4 days? That's not going to show your time frame that you were talking about here. The 4-hour, let's go back here. It's not helping me out here. Let's go 5 days, 5 minutes. Maybe we'll see a little bit of maybe what you were starting to see, basically little dropping of the VIX, which kind of would, you could envision, okay, if this was a little bit different time frame, that maybe there would be a little hanging man here up near resistance. Interesting. We'll see what happens tomorrow, right? How do I view this grid chart? The one that I was just looking at. Oh, the one that you probably want me to share with you. Let me go back here. Let me just go back to the original. I'll just pull it up here and I'll share it with you because I do think it's helpful to see this 3-month in all the sectors. And then down here in the corners, the SPX, right? Let me share the grid with you. I don't know that I have that in my scratch pad, so I'll just do it fresh. Let me go ahead. I'm going to chat that over to those of you that are here in the live session. Those of you that are listening to this on the recording, I'll stick that formula on another chart that we'll look at in a bit so that you can see that formula. Okay? All right. Given all of that, where do you think we're going to find some success in the market? Some of you might feel free to throw in the chat what's working for you. It doesn't necessarily mean that everything has to be working for you. Let me come back here, just get rid of this. And on my charts, I'm going to bring up, let's see if I added it over here. There's that. And then let me just add back in here the relative strength that compares whatever is up here in our window to typically the SPX is what we'll work with. And then I also had up here implied volatility. Really should create a style for this so that I don't have to rebuild it because I use it all the time. And then I'm going to drop volume down here. And let's make this one a little bit bigger. Let's make our relative strength bigger. And the default here is the SPX, which I think is appropriate for us to use, but sometimes you might want to compare it with something else. If you're doing some small cap stocks, maybe compare it to the Russell 2000. If you're working with a lot of technical stocks, maybe you use the NASDAQ there, okay? And this is not going to have any implied volatility on it. All right, strategies that might be working for you. Go ahead, chat that in. I'm going to come over here and we're going to look at the different strategies that we could consider using. We might be in a mode where we're maybe looking at a little bit of bullishness for those things that are still holding really strong. I think we're going to see some pockets where we could see some strength. Some of you, if you're feeling a little bit more neutral about things, might consider some of these strategies. The ones that you want to be careful of are that are just kind of slightly neutral. In the neutral, we're looking for not a very big move. And if it makes a real big move on you, then you could end up being on the wrong side of that kind of a trade. We saw that happen last week when we were looking at one of our trades that we did. I think we just did a long call diagonal spread. We weren't looking for a real big move. It went way past where we wanted it to go. If we're looking on a little bit more of the bearish side, we're going to want to see that relative strength line going down, letting us know that the stock's weaker than the SPX. And we might consider some of these strategies in here. Super bearish, maybe a long put. If you're not maybe quite as bearish, maybe doing a short call vertical, right? Because at that point, maybe we just need it to stay below a certain point. Just kind of keeping below here. A long put, man, we really need that thing to drop. A little bit similar on the long put vertical, except we've got a hedge leg there, so it's not quite as bad. And you can get in at maybe a little bit lower cost if you do, say, a long put vertical. Okay. Synthetic short stock, if you are super bearish, maybe you're looking at super bearish conditions, super bearish stocks, then this is where you might consider doing something like that that's very, very bearish. Okay. So things that maybe are working for you, JDL says maybe selling puts. Ricebird says you've been selling puts way out of the money. Okay, so looking to maybe some things that if you're put the stock, you don't mind. Okay, Very good. Ricebird says you're not so skilled at bearish spreads. Well, we're going to be doing some today, all right? We haven't had a chance to practice those a lot. The market conditions overall have just given us little short pullbacks, and so we really haven't had a lot of opportunity to do some bearish things. Let's go ahead and look at our first stock that we're going to be using here. And I have so many good ones. Let's start out with this one. We'll see how many of these we can get through here today. Used to be called MicroStrategy, now called just Strategy. They changed their name a little bit ago. This is a stock that had kind of been quite bullish for a long period of time, but look, it hasn't hit a new high for a long time. This was back in July. And we can see since then just lower highs, lower lows, lower highs, lower lows. It has, in terms of that relative strength, this line is going down. That means strategy is weaker than the SPX. And so for something bearish, man, we want to piggyback on stuff like that. Okay. Implied volatility right now is going up, which isn't that unusual to see when something's pulling back, right? Because implied volatility and uncertainty certainly go up when something's starting to trend down. Now, I wanted to see maybe where support and resistance were. And I had to go back a ways to find this 234 area and this 182-ish area. In fact, I think I had to go to a 2-year chart on this one to see where those lower areas were. So this I'm going to call 182. And on the chart, it doesn't look like it could be necessarily that much. But if the price of the stock right now is at closed around 208, we've got what, about $30, maybe $29 for it to drop to this next level. So dollar-wise and percentage-wise, that could be pretty significant if we look at it that way. Okay, so I'll go back to my shorter chart. You know, you look at this and you're like, oh, really? Is that about $30? Yeah, it kind of is, right? 182 from 208. It's kind of in that range. Okay. So on that, let me do this. I'm going to copy, for those of you that didn't quite get that formula, let me put it in a text box on this screen that we're looking at here, okay? Because I'm going to have the screen up here for a moment. And let me maybe move it over here. Okay, remember, you can use the whole URL if you want, or if you want, you can just grab this much that starts with the exclamation point, okay? Do a control copy. Many of you are familiar with what you do with this, but we just come up here to the setup, open shared item, and then you're just going to paste that formula in there, hit preview, and then import it, okay? And then when you import it, you might want to save it as something. Give it a name you'll recognize again, like mine. What did I have mine? Mine's called Sector Matrix 3 Ways. It used to have a white background. I changed it to black, so it says white, but name it something that makes sense to you, okay, when you bring that in. And there's the formula, okay? Think things might look like a bearish trade here? Yeah, absolutely. Now, you might go, well, there's a lot of bearish trades we could choose from. If you're really aggressive and you think this thing is going to drop, you might do a long put. They're going to be a little bit more expensive contracts because it's a $200 stock. For bearish strategies, something that I'll put in my criteria that I'm looking for is I want the stock to be at least $40. I want it to have some room to still drop. Now, your threshold may be different. Maybe you're 50 or 60, or maybe you're okay going down to 20. Okay, just the idea that we want there to be some room to drop here. And I would say yesterday it looked like it was breaking support, but we weren't really sure, right? Because this low is about as low as this low here on the green candle. So today just kind of gives us some confirmation that it's definitely heading down. Now, what I was looking at here on this one is to do a long put vertical. The options that are the most liquids are these December 19s, okay? Many traders for any kind of vertical are many times look for between 20 to 40 days worth of time. So that fits right in that area that some traders like to use. You could pick around in the weeklies and maybe you'll find some things that have a decent enough activity level and open interest. You can see here is my delta column and my open interest column. You can see, oh yeah, lots of activity here. We certainly could find some contracts to work with. Now here I was looking at doing 210, 200. 210's the at the money right now. And then 200 would be spreading it out by about 10%. If we think the stock truly could drop to around 180, I mean, that is like way out of the money. And there are some people that trade based on where they think the stock is going and what they think the target price is. And they might choose a strike price going way out to the target because they're looking for a really big move. We're not going to do that. We're going to just maybe use the at the money, the 210, go 10 bucks out of the money on a long vertical here. So we're going to just say buy a vertical. And we still have a pretty good risk reward ratio. Okay, we've got 36 days for this one to play. It's about a $2.50 wide spread, maybe a couple of pennies cheaper. Hopefully we get filled at that price tomorrow. Market's not open right now. So on a $5 wide spread, we're risking about $2.50 to make $2.50, which is about 100% return. Now, like I said, if you wanted to be more aggressive, you could go further out of the money with something, knowing that, around that 180 is kind of the target we think the stock could drop to. Let's see. Reggie said, should we wait on the bounce on strategy to take a bear trade? I like it right now, and the reason I chose it is because I feel like it today really let us know it broke through the support. Yesterday, I wasn't so convinced, but I am more convinced here. Okay, so that's why we're going to take a look at it. Let's go ahead. We can risk in this account, we can risk up to 1,500 bucks. Okay, so we're going to see how many contracts we could do there. So if we are willing to risk, let's maybe bring this up here. If we're willing to risk $1,500, and in any trade we might be risking, I'm just going to put in 250. Okay, that would say we could do 6 contracts. Okay, so we're going to do our 6 contracts. Let's get that lined up. And let's do a first trigger sequential here. And we're going to put in an opposite order to buy it back. Now, if we really, let's see, create an opposite order here. If we really had to gain about 250 bucks per contract, and we were doing 6 contracts, that's some pretty decent change. We don't necessarily need to make sure we get a lot of it or the majority of it. We could say, if we get the good chunk of it and have a good profit, sometimes it kind of pays to take profit while it is dropping and showing weakness versus kind of waiting till you get most of it. Because sometimes you get in a situation, I've seen this happen before, and you probably have too with yourself, where you're sitting really nicely on a trade and you're like, oh, it's in good shape. Let's see if we get a little more out of it. And maybe we get a little lazy putting in some exit points. And then we see that we lose a lot of it. And that can be really frustrating. So let's be really aggressive about locking in the gains on this should it continue to drop like we think it's going to. Okay. If we get a chunk of 250, what percent would you feel comfortable with? Okay? I ask you this all the time. Some of you are 50% people. Some of you are like 70% or 80%. You can decide. But if you get like a big chunk, say 50% in the first week, sometimes people are happy with that. And they're like, take it, move on to a new trade. Okay, just kind of bank the money. We won't go 50%, but let's go 60% on this. Okay, because it is a pretty healthy return. So let's say we have 250 to gain. And if we are going to say we'll be happy at 60, did I say 60%? We'll go 60% here. Then that's $1.50. So $1.50 added to 250 is going to be what? It's just about $4. Okay, I'm going to go for $4 here. And if we get filled just a little bit nicer, we'll just be a couple pennies over. Okay. We'll be satisfied with taking that gain and getting out. Couple questions here. Actually, several questions here. That's going to be our trade. I'm going to hit send, but let me see if some pertain to this exact trade here. So question here, should we wait? Okay, we talked about that, Reggie, waiting for the bounce down. No. Let's see. If we were going to do a short vertical, we would be using calls. This one, we're going to use a long vertical. Okay. Hill wants to know how we can incorporate the market maker move into the strike choices. On a market maker move, like when stocks are going through earnings and they'll have this little MMM here, and we get an idea of what the market is expecting, although it's never guaranteed that it's going to move that amount. Some people, it kind of depends on your strategy, they might incorporate that into the strike they choose. So for example, if we were looking for a $15 move, because that's what the market had priced in, we might move strikes that we're looking for it to go to, maybe $15 up, and find a strike price that's closest to that. Okay. In this case, their earnings took place, what was this? This is October 30th. So they just had their earnings. So really, unless there's another announcement of some sort, the move that's being expected here isn't that big. Okay. All right. Momo says, is a delta of 0.55 about what we might recommend for this strategy? Some traders will just go with the at the money. And that at the money could be anywhere from 0.45 to 0.5 to 0.5. It's kind of clustered around that 50 delta area, but it might be a little bit higher and a little bit lower. And so some people might like to do at the money. If somebody wants to be, say, more conservative in a trade, they might start a little in the money and not look for as big of a return. Or, like I mentioned, if your target's out here at 180, like where we think the support area might be, 30 bucks away, then they might choose some strikes out here. But I would say that's very aggressive, because what if it doesn't move that whole amount? We need the stock, we need those options to have some intrinsic value as it's getting closer to options expiration day. And so if it doesn't make that big of a move, then you could be out, like you could possibly be out of what your net debit was. Okay. All right. Is it possible to not focus on Greeks and focus on probabilities of in the money and out of the money for verticals? I think it's very helpful to look at out of the money probabilities on credit spreads, right? Because we're looking to say, well, what's the likelihood? We're risking more than what we have to gain. And so what's the likelihood, or what's the probability that the trade will go our way and expire out of the money? And so I think it's incredibly relevant, especially with short verticals. We look at that all the time. With a long vertical, you can still look at that. Okay, say, for example, here, 210 is going to, or 205 we settled on. 205 is going to be our leg where we want the stock to move beyond, right? We want it to go to drop, but we'd love for it to drop as far as it can, but at least to 205. What's the probability that this one would expire out of the money? Is about 50% right now, right? Because it would be that. And so if you wanted to create rules like that, that you say, I want my probability of expiring in the money. In this case, this column is an out of the money column. I move my mouse just right. No, it's the in the money column. Oh, okay. In this case, it's about the same percentage, 50% chance it's going to expire in the money and 49.2% chance it'll expire out of the money, but still pretty close to each other. So you can incorporate rules there. We won't do that in our example trades here today. Okay, hopefully we caught all those questions. Let's confirm this. Let's send it on. And we're going to put this in our option strategies bucket. And we haven't spent nearly as much time on some trades as I would like to. So let's hit the board again. And let's do this. We're going to do an example here. And I'll tell you, I did want to use a credit spread here when I was looking at it initially. I wanted to use a credit spread because it does have some support down here about 60 bucks, but it could easily drop through it, right? That could just be some real short-term support, and it could go below it. But maybe just looking for it to stay below a certain point with doing a short call vertical was my preference here, but the strike prices just didn't really add up, okay? If I come out here to the trade tab, it has really good liquid trading, but there wasn't enough open interest in these single strike prices, right? 15, 17, 41, 2. And so I kind of was like, okay, we can't do that. So I looked here at doing a long vertical rather than the short call vertical. And on this one, let's go ahead. We're going to queue up just a couple trades here. We won't go in as much depth here. But again, stock is at 62.30. That's where it closed. And here, I was looking, let's see if that shifted enough that I might want to shift my numbers here. I was looking at doing the 65.60. Let's see how that works out. The idea here being, if I can't do a credit spread, let's at least do a debit spread where it doesn't have to move a lot. Okay, we want it to go to 60. I would love for it to go beyond 60. That might be where it gets hung up a little bit though. Okay, so we might not want to choose a strike way out of the money and be super aggressive with it. Does that make sense? If we were saying, if we went and rolled the strike prices a little bit and went, instead of 65.60 went 60.55, then it definitely would need to break down through that support level on a long put vertical. Hopefully that makes sense to you. So this one's going to be a little bit conservative. We're willing to risk 258, and it's almost a 50-50 proposition here on this $5 wide spread. In this case, it's going to be what, 242? But what we have to gain. Same thing here. We're not going to be able to do 6 contracts. We're only going to be able to do 5 here due to not wanting to risk more than $1,500 in a trade. And let's put our first trigger sequential in here. We're going to do the same thing where we're going to say, hey, if we get a chunk of it, let's take our chunk and move on our merry way. Okay, so we'll go ahead and put this one in. This one, let's go ahead and look for about 70%. You don't have to use 70. I'm just trying to use something different, mix it up a little bit. Okay, you can use whatever percentage makes sense to you. So if we take our 2.42 and we say, hey, we want to get 70% out of it, let's multiply that by 0.7. That's going to give us $1.69, and we're going to add that to 2.58. That's going to say get us out when it gets to 427. Okay, we're not going to wait for it to go all the way to 5. We're close to 5. I think that was 427. Let's see if I did that right. Yeah, 427 here. And then, of course, we're going to make it good till canceled. And what we're going to do on this, if we see a significant technical reversal, okay, if we see something like that, we might consider getting out early, okay? But when we do a vertical, it gives us a little bit of flexibility that we don't have if we just said bought a long put, right? With a long put, if it goes the opposite direction, a day or 2, maybe 2 in a row, we might have to get out. With a vertical, we can let it kind of meander around a little bit before we get too concerned. Okay, so let's go ahead here. Knowing that we would like the stock to get to 60, right now that only has a probability of about 42% of expiring in the money. Okay, the further out of the money we go, the lower that percentage gets. That's why it would be more aggressive if we went out of the money. All right, let's go ahead. Let's put this one in our option strategies bucket here as well. All right. I hope you guys have become subscribers to our Trader Talks channel. I don't know if you have, but I hope you have, because I get a lot of questions of, how do we find the recordings when they're done? Some of you are veterans and you know exactly where to go, okay? But some of you aren't. You need to know. So we have our Trader Talks channel. And suppose you wanted to go back and look at previous episodes here. I've got it on playlist. And I'm down, this class is down about 7 rows. And here's our selecting an option strategy. And last week we took a look at, did we think the market was bluffing? Like, does it really still have some strength, or, is it starting to weaken? And I think we're seeing the kind of the continuation of that we're starting to see a little bit more weakness, especially in the NASDAQ. Not as much in the SPX, but since it put in that lower high, we're going to be on the lookout for that, okay? So this just makes it easier for you to go find those classes, click on View Full Playlist, so that you can see those. All right. We also have some short videos that we've started doing, which are just kind of little smaller videos that illustrate a concept in 10 minutes or less. Okay, so it looks like there are some ones here that I actually had not seen. They weren't here earlier. Maybe go to my home. On my home screen, it's this bite-sized content, actually, that I wanted to see. The shorts actually are for better viewing on your phone, okay? These bite-sized ones that are about 10 minutes or less here. And Brent's just put a brand new one in here 3 days ago, so I think this was just on Monday or Tuesday. Mike Fairborn put a PEG ratio showing, he says, PEG ratio unites growth and value investing. And so he'll give you a little blurb about using that PEG ratio, how that might fit in. Okay, so I hope you're taking advantage of that. Let's do some quick trade review, and then I'm hoping we can wrap up with one final trade here. Our trade review is not going to be too extensive, okay? Last week, we put on a bullish long vertical and a bearish long vertical. The bullish one was CrowdStrike. We have a 50 or a 560, 550 call spread that's long, and we're down a little bit on it. We paid $370 for it, and now it's worth $317. That tells us what? That just kind of tells us that the stock really hasn't been dropping that much, right? CRWD. Okay, just making sure I've got the right stock. You see, I've got our 550, 560 line here letting us know where we wanted it to go. We got in here. It ran up a little bit. And so for these couple of days, and even yesterday morning, it was up. It's pulling back a little bit here. We're just going to be conscientious of it. We're going to make, just pull it up, make sure it's not putting in a significantly lower low. If it puts in a significantly lower low, then maybe what has happened is maybe it's a double top, right? Because a double top is a bullish reversal pattern, okay? And it got up to roughly the same area there, 550, 560-ish almost, right? And so, yeah, if it closes down below here significantly, then we might be looking at some bearishness. We'd need to close the trade out. Right now, we're okay. We're going to let it work. We wanted to put in a hard stop on it. We could. The other one we want to look at is Dash. Now, Dash, we did a bearish trade on. It had just had its earnings when we looked at it. We put in our order with the idea that it had more room to drop. We got filled on this day here, okay, where the green candle is highlighted. We got in here and it ran up a little bit, and then it really actually kind of took a few days to get back down to where it was when we got filled on the order, okay? So we need it to go below 185, so it still needs to drop a bit. It's at 195. We need it to go below 185. We still have plenty of time on it because it's a December expiration. Right now, we're up on a little bit. Most of it came today, okay? But we've got 36 days left. We have plenty of time for these trades to work, okay? All right, let's do one last trade that we're gonna kind of dash through, but it's not dash. Let's do Reddit, okay? On Reddit, let's look at the chart first. See how nicely It's been downward trending, showed some weakness on its earnings, put in another lower high. What did it do yesterday? Put in another lower high. So today is truly that close below the low of the high day. All right, so market's close, so we can't get in right now, but we would look to get into that tomorrow. And we've got a little ways for it to drop to roughly the 166 area. So from 189 to 166, that's a decent little pull. But even if it just kind of goes sideways on us, we're looking to do here a short call vertical. Strikes we're looking to do here are 210, 220. Let's see if those still make sense for us. To look at 210, which is a 36 delta. Look at all this open interest. Oh, that just makes me smile when I see open interest like that. It means the spreads are closer and tighter, which means it's easier for us to make money on it. It's a $10 wide spread. Our max profit here is going to be 240. So what does that mean as far as our max loss? That's going to be 760, right? Which is so close. We could almost do 2 contracts, but that would put us over a little bit. So we're not going to. We're just going to do the 1 contract here. Okay. Looking to bring in 240 for that potential risk. Same thing. If we get a chunk of this, we're going to be happy campers and be on our way. This one, let's see, 240. This return is going to put us about a 30% return on this one, which is okay. It's not like, it's okay. Might meet some traders' rules. There might be other people who are like, no, I want a little bit bigger return than that, than 30%. And you could kind of wait and see what it does tomorrow, maybe get a little bit bigger credit on it or something like that if you wanted. But since we won't be together tomorrow, can't do that. Let's go ahead and create our opposite order, place we're willing to get out. On this one, let's say if we get 70% of it. Okay, if we get 70%, only 30% is left of that 240. Multiply that by 0.3. We'll go buy this back at 72 cents. Let's put that in. Good till canceled. We'll send that to our option strategies as well. Now in the short vertical, we really just need it to stay below the short lag. You know, so this we've got 220, 210. We're looking at 210. Right now it's at 189. So there's a little bit of leeway there that it could go up a little bit. If it just meandered sideways for a while, it would still be just fine. Okay. But that's what we're looking for it to do in that trade. If it had a significant close, say above this high, which would be above this diagonal resistance, we'd consider getting out. Because a break of diagonal resistance is an indicator that the trend might be changing on us. All right. Let's see if we have any questions left. Okay, we talked about where the stop could go. All right. I think we're caught up on the questions. Cameron, thank you so much for your help answering questions here today. Remember, if you do have questions about this, go ahead and leave me a message on YouTube down in the comment section. You can leave me a message. I go back and look at those throughout the week, actually throughout the day, to make sure you can get your question answered fairly quickly as well. So when you do have those questions, go ahead, send that to me there. Now, this is the last class of the night, so we are going to wrap things up here. Tomorrow, bright and early, we're going to be back with our Trader Talks. Friday mornings are going to be an ETF focus. So I will be there with James Boyd in the morning. Kevin's still out, and we'll have our ETF focus. You've got to be there live to catch this information. We don't repost this or post this recording, okay? Because it's the ETFs. All right, you guys, follow along, do some practice trades. You'll get so much better at learning these strategies, feeling comfortable with them if you practice. So I'm going to encourage you to do 1 or 2 or 3 of these practice trades that we're going to follow in our class. All right, you guys have a great evening. Good night.